I am mining investor and editor of Resource Stock Digest, Gerardo Del Real, here with my partner, Mr. Nick Hodge, who's an investor and publisher of Daily Profit Cycle. This is our weekly therapy session we call Investing in Bizarro World, where we talk about markets, what we're investing in, and all of the crazy stuff going on all around us. This week, we're going to talk about Jerome. Jerome has spoken once again, and oh, did he speak? We'll talk about the effect that had on the US dollar. We'll talk about the most inverted yield curve in 42 years, what that means and why that's important. We'll also talk oil, Iran, Saudi Arabia, Quebec, a big lithium win for Nick, Capitol Police, Elon, a lot to get to. Let's get to it. This is episode 193 of our therapy session that we call Bizarro World, Investing in Bizarro World. Mr. Nick Hodge, how are you?
I'm doing well, Gerardo. It's good to be back again this week without a mask. How are you?
We all wear masks, Nick. I mean, sometimes we wear literal masks, sometimes we don't, but you know, deep down, we all wear a little bit of a mask. No, I am well. How was Halloween for you and the family? I saw your wonderful outfit, your beautiful family. You all looked incredible. You were particularly dashing.
Oh, thank you. I was the bearded lady. We had a circus theme going on. My wife was the ringmaster, which isn't too much of a deviation from the truth. And then our three kids were, traditional circus things, tigers and elephantes and clowns. How about you? And lots of candy. It's too much candy to even steal from the kids. We're going to have to lose like a dentist around here that I think you can trade it in for cash. I think we might do some of that.
That's hilarious. No, it was a phenomenal weekend. It coincided with my birthday weekend. So, Halloween debauchery all weekend long. It was fantastic. The kids had a great time. And it was great. Wife had a great time. We enjoyed all the festivities and the whole weekend. It was great.
Happy birthday, sir.
Thank you. Hopefully a year wiser. We'll see. Let's get into it. Jerome spoke and then he misspoke. And now everybody's trying to figure out what Jerome said. I'll give you my quick 2 cents. I think he meant to sound a little hawkish. And then it came off as dovish. And then I think somebody whispered in his ear, hey, you're coming off as a little dovish. Everything's rallying. And he said, what? And he's like, I'll show them at my press conference. And then he overdid it a little bit, right? And that's my very educated technical take on the speech.
I mean, it's as educated as my take is. I'm not a huge Fed watcher. I mean, I obviously stay in tune with the rates and what the market is pricing in. But he's got wings. I don't know if they're hawkish or dovish. I'm not sure. So there is no pivot, which I told you there was not going to be. It wasn't 0.5%. It was what the market was pricing in. Still a 0.75% rise, 75 basis points. As you say, the market did one of these, which it's done before. Everything was up and then everything was down for the reasons that you say. The press release turned markets around. I think there's going to be more rate hikes, and so this is sort of what I wanted to say. Not get off my chest, but continues to say that it's not a pivot, like. Even if he goes,
go ahead, Nick. Go get the dirt off your shoulder, man.
Yeah,
Even
if he goes to 0.5 percentage point, in December, and then again in early 2023, the Fed is still raising the interest rate, right? Whether it's by 0.75 of a point or 0.5 point, like the trajectory is still, and the market is still pricing in. The forward curve is still expecting, at 5% interest rates on the short end, and so. You're going to have to deal with that still for a little bit longer. And you still have very strong employment. So I think the Fed thinks that it can continue to hike. We'll get a jobs number that'll be out before this podcast is or early next week. And we'll see what that, jobs number looks like. If it starts to look a little negative, where the jobs have been looking positive, the market might take that as dovish because they're going to say, "Oh, look, the jobs market is eroding or deteriorating," and that's going to make him, be more dovish in the next couple of meetings. But you mentioned the inverted yield curve. The 2-year yield is like 5%, Gerardo, by Agri charts, right?
You know it, baby.
The inversion is almost a full percent. And so you do still have a recession to work through. Now, all of that said, time is just elapsing, right? I see investors getting less bearish, and I see sentiment starting to improve. But I want to reiterate that it's not because the Fed is going, dovish. It's just because time is elapsing. The Fed has raised rates like they said they were going to raise rates. It's just a time lapse thing. And so here we are in the first week of November, and there might be some things to buy here headed into the end of the year, not only in the resource space, which is exceedingly cheap, especially on the gold side. You had bad earnings out of Newmont, which put another leg down. You can lock in a yield on Newmont that's over 5.5%. I found myself entering bids for, gold ETFs this week, the miners. And so the same on the uranium front. And I know I'm spanning a lot of topics here now, but all that to say that the Fed is still hawkish, I'd say, and the market pays perhaps a bit too much attention to it.
Listen, we were in New Orleans, what's now over 3 weeks ago, I think, and we told everyone then, you specifically said the Fed could be hawkish for another 4 to 6 months, and a part of my presentation, my portion of it really spoke on how long are you willing to just wait for the Fed to pivot before you feel confident enough as an investor or speculator to allocate capital. And again, it's beyond me, right? We just published the newest issue of Junior Resource Monthly, which is one of my paid subscription services. And I keep pounding the table on uranium and lithium, and it's just beyond me when you have sectors that have such bullish fundamentals, why you wouldn't allocate capital there as opposed to just waiting until Jerome tells you it's okay again, because something may seriously break before it's okay again, right? And in the meantime, you have sectors where you don't carry that macro risk. The lithium trend isn't doing a 360 anytime soon. The uranium fundamentals aren't all of a sudden going to get bearish. Those are trends that are years in the making on from a very bearish baseline, and now provide you years of bullish runway. So again, there's sectors to invest in. I keep saying the same thing every week. We keep profiting from it every week. You just had a big win in Quebec with a lithium company. You want to talk about that a bit? And I bring it up only, again, not to be braggarts or to keep pounding our chest on the wins that we've had this year, but just to highlight that despite the gloom and doom that everybody's pitching you, there's a lot of money that has been made this year. And we've been fortunate enough to capitalize pretty damn well from those trends to offset some of the picks that haven't done the best in the gold space specifically, right?
Yeah. It's a company that was awaiting a provincial permit. So it was a company that had already drilled out their deposit, which takes years, by the way, which is one of the reasons that the lithium bull market is going to last for years. Had originally financed it back in August of 2020 or summer of 2020 at 30 cents. Watched it run all the way up to like $1.50, made some 400%. Sold some. Took some off the table, got back in when it fell back down closer to $1, and then it got its final provincial permit this week from Quebec. So it's a deposit that has nearly over a $1.5 billion net present value, right? And the shares were trading with like a $400 million market cap. And when you looked at it next to some of these companies that have gotten really big valuations as they head closer to production and development, like the Sionas and the Sigmas of the world, it had a lot of room to go up, and honestly still does. So when you look at it based on those multiples, what they're getting relative to their NPVs, this is a stock that we've already made several 100% on. It's a larger position for me because of how much I put in the financing, and because we had warrants that I exercised as well. So what do I want to say? It's very clean lithium, I guess is what I would say. Very low mica content, very low iron content. small crystals, and all this is coming from an education I got in the past week from the president, who I spoke with at length about the project, who, by the way, sold his last lithium company for $6 billion with a B to Albemarle. That was a Rockwood Lithium. And so he's very excited that this project is not only going to be producing 5.5% spodumene concentrate, but 6% technical grade spodumene with high recovery rates, and that fetches a premium. So he's convinced this mine, as it gets built, is only going to be one of 2 or 3 mines in the world that produce that high grade technical spodumene concentrate. And he would know, right? Because one of the last assets he sold was one of them that he sold to Albemarle. And he was very coy. I talked to him literally 3 days before they got the permit, and he says, he was telling me, smiling, we're waiting for the permit on an hourly basis. But he was also, pretty happy when I was asking him about, who's at the table, because now they got to finance this thing, right?
Everybody.
Right. And so that's pretty much the answer, right? He was even talking about some, major international industrial companies, ceramics and glass manufacturers that I really am not familiar with, like Schott, for example. I had to look that company up. And so anyway, it's very exciting. And again, when you look at the comparables, when you do the math, which I did in a report that I mailed out today, you can see a path for this stock, which is around $2 now, to get to $7, $8, $9, $15, right? Based on, valuations that other companies are getting. And as we mentioned last week, exploration upside as well, which he was keen to point out to me. They released some results recently. They've got a very large land package in Quebec, and not just at the project that just got approved, but 40 kilometers away in the Nemaska area. So, I'm not going to give you the name because we're going to be doing some advertising around it here soon. But the lithium market's not going away. Look, this is a project that they've been plugging away at for years, right? Yeah. I mean, years and years and years. And so if you look at all the stats that we frequently cite, Benchmark Minerals saying that we've got to increase the amount of lithium we mine 25x by, 2040 or something like that. Or that, in 2040, we're going to be using as much lithium every month as we mined in all of 2021. Like all these stats, right? It's like, well, good luck, because I've been involved with this project for 2 years, and it took a year to get a provincial permit. And so it takes time, and the price is extremely elevated. And so thanks for the kudos. I guess we took a tiny bit off the table, but there's still a lot to go, and we'll see how much equity they actually have to put up to build this mine. That's sort of the next catalyst, right? I'm pretty sure there was, speaking of doves and hawks, I'm pretty sure there was some birds circling, right, that are going to want to give this company some capital to help them build it, either as part of an offtake or a strategic investment. So we'll see how that shakes out. They might not have to dilute too much to get this project off the ground.
Kudos to you, because I'm sure shareholders want to give you kudos. You financed this in the low 30s, if I'm not mistaken. It just hit 52-week highs. It's hitting 52-week highs while other companies like Meta are down 70% for the year. It's hitting 52-week highs and looking to finance a project that's got great exploration upside. And you mentioned something very interesting: the variety of companies that are approaching companies like this company to help finance these plants and this mine. And I think this particular company and where it's located is going to find offers that are incredibly non-dilutive and accretive. I think that the 2 companies you mentioned earlier happen to have ASX listings, and the ASX crowd really knows how to appreciate these types of lithium deposits. I'm kind of talking my own book, because everything this company has is also shared by my top holding, right? Which we've talked about a lot in the past. And so, no, I see nothing but blue sky potential for that company that you're speaking of, which we'll keep the ticker symbol to ourselves, and Patriot Battery Metals, which is, my top pick and my top holding. And I'm talking my book again, but a lot of money to be made. You've made this in a very volatile market. You got the major indices correct. You've had the energy market correct. Again, that's not to say that everything we pick goes up, but man, we've allocated pretty damn well during a very tough environment. And so if you can deliver new 52-week highs in this kind of market, kudos to you, sir.
Well, thank you very much. You've done quite well with Patriot Battery Metals as well. That's a portfolio maker by itself.
Yeah, no. And room to run, right? Room to run. I think, it's still consolidating here with the quiet period while it gets its ASX listing. It may be quiet for another 2 or 3 weeks. That's an opportunity to accumulate. I may be adding to my personal position. We talked a bit about that off air. Let's go back to the overall markets. I talked about Jerome. You mentioned, Jerome, and you gave your take. The US dollar, last week we said, near term, it looked like it had been a bit toppy. It did pull back to the 110 range. And then sure enough, as soon as somebody whispered to Jerome that people are taking his speech the wrong way, it's now surging back up and flirting with that 113 area. How do you see that playing out? More capital flight into the US dollar?
I mean, it's been by the dip in the US dollar for the past nearly year almost, just like it was by the dip in the indices for a long time before that. Yeah, the trend for the dollar is still bullish, and the trend for rates is still bullish. And again, that's what keeps the lid on the metals prices. It's why you can't get silver above $20. It's why gold was closer to 1,600 this week than 1,700. And
no silver squeeze to the moon, Nick.
No, and I saw more people calling for it.
I saw it. That's why I brought it up.
Citing depleting stocks on the COMEX. None of this matters. As I said in my presentation in New Orleans, the only thing that matters is the last price, right? And the last price is bearish for certainly silver. I mean, it's not in an uptrend, and the dollar's going to remain strong. Other central banks continue to cut alongside the U.S. Federal Reserve. I know you could say that Canada blinked or whatever, but other banks aren't blinking. Saudi Arabia hiked 3/4 of a point.
We're going to talk about Saudi Arabia later on.
There was another country that hiked 3/4 of a point, and Norway was hiking, and so. No, the dollar is going to remain strong until it isn't, and I think that's still a quarter or two away.
I want to cite one more lithium fact for everybody. I'm going to go back there really quick. While you mentioned Newmont earnings and how disappointing they were and how you can get, a 5% dividend while you wait for the gold sector to turn. And look, when the gold price starts surging again, and it will eventually, we're not, gold bears or silver bears. It's just in a bearish trend for now, right? That'll rotate over. But while Newmont's struggling to deliver on their bottom line, Albemarle, which you mentioned earlier, right? Lithium giant Albemarle just posted 152 jump in quarterly profits. It's a tale of two markets right now, folks. You have to do some due diligence in this space if you want to make some money. It's beyond me why we have to make money just from gold or just from a silver squeeze or just from cryptos to the moon or Bitcoin to the moon or Dogecoin to the moon. I mean, you can either, like Keith McCullough says, you can pick your favorite narrative and go fall off the ledge with that. Or you can actually look at what's happening and put pencil to paper and start looking at numbers and trends and make money off of those. You pick your poison, everybody. I'd rather make money off of what's actually working than, trying to be right with gold and silver right now. Gold and silver are going to continue in sideways mode, and silver maybe has another leg down. We'll see.
Two things there. Albemarle itself is a dividend aristocrat. Like if you were to Google dividend aristocrat.
Oh, I like that word.
And look at the list of, I think it's 60.
Don't cancel me, people. I like the word aristocrat.
65 companies that have consistently raised their dividend for years and years on end. There's the Pepsis of the world and the Abbotts and the AbbVies and the Johnsons and Johnsons. But Albemarle is on that list. I mean, it's a small dividend. I just pulled it up. It's only, 0.59%. But if you're a long-term, safe, stable-minded investor, that's got earnings growth, and it's like $25 away from its high, trading in the 270s with a high 52-week high of 300. And then and back to gold for a second. I know we're jumping around a little bit, but gold will have its time on the backside of this recession, and as the Fed not pivots, because I'm done using that word, but as the Fed comes to the end of its hiking cycle, it's fucking did everything it said it was going to do. There was no pivot.
For once, I gave Jerome credit where credit is due. He might fuck everything up and implode the whole system, but he did deliver this time. It's the first time in his history, right? He hasn't blinked yet. Good for him.
So as they come to the end of their hiking cycle, gold is going to have its day. I was telling you earlier, I don't know if it was before we started recording or not, I was putting bids in for GDXJ today. I mean, it's near 52-week lows. That's a time frame thing, that pays a dividend by the way as well. Like, I'm content to reinvest that dividend in GDXJ and let that compound for the next year or two until the gold cycle comes back. It's not that I'm saying, gold is the devil. I'm just saying gold is not going to go up, A, in the short term, and B, it's not going to go up because there's some squeeze or there's some, whatever conspiracy or, depletion or, we're out of reserves and whatever, Fort Knox is empty. Like, that stuff is not investing. You know what I mean? So, anyway, gold will have its day, and I own gold stocks as well, for sure.
Oil had itself a pretty decent week on the back of some rumors that Iran was potentially looking to attack Saudi Arabia. It's interesting to me how much the U.S. continues to cozy up to Saudi Arabia, despite the, let's say, sketchy history between the two nations and things that have actually happened in this country to us and to some of our citizens, very explicitly coming from that part of the world as it relates to their government, not their people, of course. And so interesting to me that they're sharing intelligence on something of that nature. Interesting to me that they chose to publish the fact that they're sharing intelligence. And again, we call this investing in Bizarro World. It's not getting any less bizarre. I mean, you had, North Korea firing off missiles. There's increased whispers of China taking Taiwan, because why not, right? It's 2022. The bingo card is getting bigger. Any thoughts there?
I mean, yeah, I'll talk because it's a podcast and that's what we do. For me, the couple of articles I read seem to think that if Iran does do that, it would be, as a distraction from what's going on domestically in that country, right? To divert away from the protests and the things that have been going on there. As far as the likelihood of it happening, I'm not sure. I'm not a geopolitical expert. I do know that it would drag the U.S. and allies into it. I mean, at the end of the day, despite all the things they already said about the Rocky Pass, 9/11, Kashgalgi, all that stuff, we still need our oil and they're still our allies. So, we would go to protect them, and who knows what kind of quagmire that would be in the Middle East, because certainly the Middle East is known for some quagmires. What's interesting and challenging, I should say, maybe not interesting, is that, oil got to $90, and that's not like, I mean, yes, it went up, but it didn't like soar back to 100. Right. Certainly not back to the 110 or 115 we were at in spring of 2021. That sector is increasingly difficult to figure out. Some of the equities they look a bit toppy to me. I mean, I sold an energy MLP a week or two ago in Foundational Profits, the monthly letter. I currently don't own any mainstream oil stocks. I was looking at a couple this week, but couldn't really pull the trigger. So, and the reason for that is, I think we're in a recession, and I'm not sure how the demand destruction, how the demand is going to shape up for the oil. We mentioned last week about this, diesel shortage, how we only had 25 days of diesel left. And I guess that's a real problem. I was reading about it in a couple more, real newspapers or outlets, Reuters and things like that. And that's another reason I think that the Fed remains hawkish. They're trying to destroy demand. Obviously, they're trying to slow down inflation and the economy. And so I'm not sure how this recession and higher rates are going to slow down the demand for oil, despite the political turmoil on the other side. And so for me, it's enough for me just to say, hey, you know what, I don't get this right now, so let me just sit on the sidelines. And I think there's other sectors, just on a broad S&P level, to look at. I still own a couple of consumer staples, which is one of the few S&P sectors that has performed alongside energy this year. Not as well as energy, but certainly not as bad as discretionaries or real estate, for example. So I'm content to sit out energy for right now. Dollars to donuts. I think oil goes back down around, below 90, and this turns out to be a headline that passes. Iran to me is I lump it in there with North Korea, right? Like, fuck around and find out. Like, I mean, what do they really got? Yeah,
let's hope so. It's obviously very, very a complicated country. I think half the country definitely, leans towards democracy and leans towards being free. And then, as usual, you have the governments that, increasingly lean less and less towards freedom and more towards restricting. And, that can be said of many governments, most governments around the world. We have to talk Elon a little bit because Elon, again, the best billionaire troller that I've ever seen, right? There's a couple of other ones that are all right at it. Mark Cuban's all right at it, but he's actually more factual with this stuff. Elon doesn't care.
That's great.
Elon wants to charge $8 for your little check mark. And AOC said, laughing my ass off at a billionaire earnestly trying to sell people on the idea that free speech is actually an $8 a month subscription plan. And Elon responded, your feedback is appreciated. Now pay $8. And then some other people started attacking him for something else. And he said, being attacked by both right and left simultaneously is a good sign. And I concur. You're probably doing something right. You can manage to piss off both sides of the major political party spectrum. Any thoughts on Elon? And, you got to give the guy credit where credit is due. Somebody, I think it was, who was it? I'm a fan of his. What's his name? The gentleman from The Big Short. I forget his name. Michael.
Is it Michael Berry?
Yes, Michael Burry. Michael Berry. Yeah. And so he tweeted a post and he said, listen, you cannot like Elon. You cannot like his past. You cannot like what his parents did. You cannot like Elon for any number of reasons. But you got to give the man credit for being in the arena and playing the game. Because he gets in the arena and he plays the game and he puts his own money up. And at the end of the day, you got to admire the man that steps in there and is willing to get his ass kicked.
I mean, he'll tweet about all sorts of stuff. And so, yeah, I do have thoughts. It's amusing, first of all, to watch your political leaders and the richest man in the world get petty on a social media platform. I mean, I'd pay $8 for that if I had to. Maybe we'll finally get a blue check. I've actually submitted a few times under the previous regime and was always turned down, and I would bet that was a function of, not maybe shadow banning, but definitely some of the things I've tweeted and the positions I've taken over the years, right? I'm not like the blue check crowd. So
for those not familiar with the blue check system, can you explain, can you pontificate,
I mean, it's a verification system essentially for, to make sure that the account that you're looking at is actually the account that you're looking at. It applies to, politicians, people of stature, people in the media definitely love it, right? You get your blue check and that means you're somebody, right? You're impotent when you get your blue check, but it's, to help dispel bots and cloning and hack accounts and all that sort of stuff. And it was free, but you had to go through a process. So, and the process was increasingly onerous. Like early in the Twitter days, they were just handing it out. And then later you had to submit an application, right? This is the book I wrote, or these are my press credentials. And, this is why I should get the check. And, honestly, I submitted a few times and was never verified. So I guess I wasn't important enough. But now he's saying that anyone that wants a blue check can just, pay $8 for it. And it became sort of a cultish thing in some circles, right? So, which is why, of course, people will pay for their blue check, right? Because they want to remain verified.
Here's another good one. To all complainers, please continue complaining, but it will cost $8.
Exactly. So I got a lot more thoughts, I guess, on this. She was also saying that, he's not going to be able to, whatever, for a $40 billion acquisition and the debt that he has. AOC was saying that, $8 a month isn't going to make a dent. Well, perhaps not. Perhaps it's only I saw some numbers. I forget what they were, $50 or $100 million a year revenue stream or something like that. But one, I don't think you're the one to be giving the richest man in the world economics lessons and how to grow a business. And two, now the left is talking about other platforms, right? First it was Trump got kicked off and went to, I forget now even what that one was called.
Parler, I think.
No, there was another one. Truth Social. It was
that
called.
one. Truth Social. I can't keep
and then
track
there
of
was
all
Parler,
of them,
which is the one Kanye bought when he got kicked off. And now the left is saying, all these Twitter folks that just got fired, right? Because he fired a lot of the top executives and things. They're saying that they're going to go start another thing, and it's like, well, great, man. Like, have fun. Like, it's a free market. Go start up your own.
Get in the arena.
Exactly right. And the other thing is, I continue to say, and I've said this for a while, like, well, I kind of go both ways on it, but Twitter's a company, man, and so Twitter's not the United States of America. Free speech is for citizens and for public, and not necessarily for the private companies. Though I do, and I mentioned this before too, give credence to the argument that when so many people do join it, and this is why good luck starting your other platform. There's so many tens, hundreds of millions of people on Twitter. That you kind of have an obligation to foster free speech, and we'll see what he does with that. But back to the blue checks for 1 second, because there was a story I wanted to talk about on this podcast for a while. I never got around to mentioning it. There was a scandal on Instagram recently. Hundreds of millions of dollars were spent by people to get verified. So I mentioned how people seek, the blue check, right? Yeah. Well, Instagram has the blue check too. And there became an underground market for getting a blue check.
Of course.
And the way that these people were doing it is you would pay whoever this network was to make you into an artist, either an artist, a music artist, or an artist.
Okay.
And they would create accounts for you. You would get like a Spotify account. They would this one doctor in the article, he's like a real doctor. He's a plastic surgeon, I think, in Canada. And he paid to get verified. And he was like DJ Dr. X or something. That was like the persona they created for him, right? So they make a Spotify thing. They make like some fake tracks to make it look like he's an artist. And then they submit to Instagram, hey, this is DJ Dr. X. Look at his Spotify profile. These are some of the tracks he's made. Like, he should be verified as a musician. So he would get the check. And then that was the end of DJ Dr. X. Then he was just Dr. Smith or whoever he was, but he was now verified Dr. Smith, right? So it helped him in his, business and professional life to attract clients or whatever it was. Well, this was done, like I said, hundreds of millions of dollars were paid. Thousands of people were using this system to become artists, to get verified. And it was a total sham. And so I just thought that was a pretty good allegory, a pretty good story for, it doesn't matter if you're verified, you are who you are. And what matters is, I think, the merit of your work and the ideas you put out there, not necessarily if there's a blue check by your name. But sure enough, just like cliques in high school, cliques in social media, they want their blue checks, man.
You don't like
and that's why they'll pay $8 a month.
That's why they'll pay $8 a month, right? I mean, again, if you don't care, don't pay the $8 if you don't want to. But if you care, don't say you don't care and go pay the $8 a month, right? It's not that difficult. I think
I don't have the time or energy to pretend I'm an artist to get verified.
I don't care enough. I mean, we've had these conversations. Hey, Gerardo, you want to meet so-and-so? Nah, you go talk to him. I could care less. But he'll be good for business. Well, that's all right. I don't think I like that person. Let's skip that lunch. Anyhow, we can't we can't end without talking about the attack on Nancy Pelosi's husband. We talked about her immigration system. Once again, I'm kidding, y'all. But he was a Canadian immigrant. And if he was Mexican, I guarantee you the headline would be, immigrant violently attacks one of the nation's top politicians' spouse. That's not the real story, that this gentleman was an immigrant or that he was from Canada. I love my Canadian friends. And obviously my parents were immigrants. I have lots of admiration for hardworking, honest, immigrants. However, with that being said, I couldn't let that go and not bring up the fact that nobody's bringing it up because he was a Canadian immigrant, not a Hispanic immigrant. That's just the way that works. Here's the real story. First off, horrible attack, horrible. He was tied up. He was beaten with a hammer. I mean, had to have surgery for a skull fracture, from what I understand, and other injuries, and was in the house looking for Nancy Pelosi when Capitol Police finally got in there. Now, the part that's troubling to me is that, once again, it appears Capitol Police were instructed, as they are, right, to watch over the house. And there was a surveillance system in place. And the surveillance system was working, except nobody was paying attention. Mm-hmm. And I mean, at some point, I did this after January the 6th. And I said, look, not all the cops there opened those gates and let people in. But even on January the 6th, I was saying, there's no way all of that happens with only one or two shots being fired. and you're running amok, looking for politicians to lynch. There's no way that happens without there being some coordination from law enforcement. And again, on this attack on Mr. Pelosi, I have to believe, Nick, that some people are rooting for this type of stuff, and that some people in within the Capitol Police continue to be very, very supportive of these types of actions. Which, whether you're a leftist, a rightist, a libertarian like myself, whatever you are, you don't care about any of it. No room for that. No room for that kind of violent behavior. And yeah, I just, I don't know. I let's see where this investigation ends up, right? Seems like a lot of coincidence with that police department.
Yeah, I mean, I don't have a lot to add there. I mean, I've seen the police response at peaceful protests, and I've seen the police response, of rubber bullets and police on horses. And so, to your point on January 6th, yeah, I mean, I've seen many other protests that were quelled much faster, and certainly not allowed to escalate to that fashion. So that's one thing. And then, political violence is par for the course in a fourth turning. So it happens on both sides. And I don't think that's going to be the end of it. I haven't, looked deeply into this gentleman's background. But it's something that we're going to have to deal with as there's excessive polarization in the U.S. politics. And it's funny, not funny. You mentioned, the immigrant thing. I see, I get the ads for Idaho Senate because I'm right here on the border of Washington.
Ooh, those got to be sassy.
Oh my gosh. And my wife, I didn't actually think of it, but my wife was like, why is this guy talking about the borders? Like, is he talking about the Canadian border? That's the only one they have. Like, they border Canada, not Mexico. He's talking about like people coming in our borders and things.
My family's coming to take your jobs and rape your woman and take your kids, Nick. We're going to indoctrinate you. You're going to have to speak Spanish and it's fucking over.
And I've seen some songs, I follow John Rich, who is a country singer on, Twitter, of course, because we had some business dealings with him a couple of years ago, and he's a pretty hard right-leaning sort of guy, very vocal about whatever,
whatever he's passionate about, yeah,
right-leaning stuff, sure. And he's got a new song out. It's called Progress, and he wants you to stick your progress where the sun don't shine. And he talks about people coming basically to take our jobs, right? And the background of the video, I'll have to put a link up. It's a horrible song, but protest fires in the background, all the things, right? And so essentially this is like political music. I mean, it is like a fourth turning. Think about like, Crosby, Stills, Nash and Young in the 60s or something like that. Like,
Bob Dylan. We got,
absolutely.
Nina Simone.
Who was still alive and touring, by the way. That dude's like almost 90 years old. Anyway, sad stuff and obviously impermissible and ill-advised on both sides. It should never come to violence.
I'm sure if I went to one of my main things is I'm sure if I went to a John Rich bar, there would not be any undocumented immigrants providing any labor in any capacity.
Necesita trabajo.
Anything else on your mind, Nick? What are we watching in the markets this week? What are you watching for?
I wanted to tell you first about catalytic converter thefts.
Oh, that's right. Yeah, they get them, huh?
Which we mentioned on this podcast before in relation to the price of palladium and platinum and rhodium, which relates to another investment that we have. So
that I told you, if you subscribe to Nick's newsletter, he'd give you the name. And if you didn't make money on it in a year, we'll give you your money back for free.
I've long said that, we don't have to be the person that's stealing catalytic converters or copper pipes from abandoned buildings. You can invest in the metals themselves or the companies that have leverage to the metals, either by producing them or exploring for and developing them. And so catalytic converter thefts continue to be a real thing. We've seen the stories for years about, thieves going into parking lots, church parking lots, knocking off multiple cars or going into multiple cars overnight in the same neighborhood and taking out the components of the catalytic converter because there's a few ounces of those PGMs, those platinum group metals or PGEs, platinum group elements, that are in those things. And those things are expensive. Platinum and palladium trade like gold, and they're thousands or $2,000 an ounce. And rhodium is even more, something like $12,000 an ounce. And I just saw a story this week and wanted to mention it quickly, that there was like a national ring of catalytic converter thefts and transportation and breakdown. I think the ring in California, can I remember the numbers correctly, supplied like $540 million worth of metals to this company in New Jersey, like a company who was then breaking down the material and selling it to metals refiners and recyclers. And then there was like a ring in Oklahoma that was much less because it's Oklahoma, but it was still like 40 to 50 millions of
Oklahoma.
millions of dollars, where the palladium goes sweeping down the plains. And so anyway, international ring for catalytic converter thefts because of the price of those metals inside. And I just wanted to bring that up because, one, it's not going away. Two, it's basically a sea to shining sea network of criminals that's doing this and taking the metals and recycling them. And there's a legal way that you can profit from the high price of PGMs. And that's by, like I say, owning assets that are going to produce them. Did you just Google the story? Or I
did. 545 million. Catalytic converter thefts are up tenfold since 2018. That's only 4 years, guys and gals, with more than 14,000 reported being swiped in 2020 alone. Everybody has to pick how they make their money, right? But there's a right way to do it. And you don't have to be stealing catalytic converters, obviously. You can de-risk the odds of you going to prison, folks, if you just do a bit of due diligence. And again, subscribe to Nick's newsletter. He'll tell you a company that's got a tier 1 deposit. It's got $40-something million in the bank. It's got a new discovery. It's got an all-star board of directors and team that leads it. I'd be surprised if that stock isn't a 4-fold or 5-fold win for us in the next 18 to 24 months, Nick. And again, it's, I joked about uranium back during the bear market in December, January of last year. And I was telling everybody that I was picking away at uranium names because they were just too damn cheap and the fundamentals were too damn good. And how it was like watching paint dry for the last few years with companies like UEC that were trading at like 50 cents at one point, right? And reached the high of $657. And my point to my subscribers was, if a 10-fold return or a 12-fold return is like watching paint dry, if that's all it takes, I'll watch paint dry every day. It's not that hard if you just have a reasonable enough timeline and the liquidity to let the fundamentals and the market meet. And so that's all I got. I'll be watching for Nevada Sunrise this week. I'll be watching to see if the dollar continues its surge higher. I'll be watching central bankers and their double speak and see how much of that starts changing in rhetoric and tone. Whispers from the Bank of England that they will not continue to be as aggressive as they have been because they want to, you'll laugh at this, Nick, avoid a recession, as if they aren't knee deep in one already and haven't been for quite some time. So no, it should be an interesting week. Anything else on your end of it?
No, still watching earnings. Have had a couple of companies on my watch list that didn't have great earnings that are now cheaper. Might deploy some capital into them. Want to see this jobs report that'll be out by the time this podcast comes out, and then I have a big monthly issue to write next week. So I have more macro things to talk about as I look more closely to knock that out.
Love it. You all be nice to each other out there. Have a great November. Have a great week. Nick, you want to send us off?
See ya.
This was episode 193 of Investing in Bizarro World, folks. Be good out there.
Hey there, you independent-minded investor. If you like this video, make sure to tell us so by clicking the like button below. Subscribe to our channel so you never miss another one. And share it with everyone you know on social media. You can also click the link in the description below to check out more information-packed videos just like this one. Thanks for watching.